So you have a presentation, you talk to investors, they say yes.
Mm.
But what realistically happens? Do they just like, boom, next day you have
No,
open your
okay.
bank
So the
account?
process is usually as follows, and that's probably regardless of whether it's debt or equity. Let's say you have an ability, you have the option to actually pitch to an investor, whether that's a physical meeting, online. I mean, I've done like all of those types. You present your story, you tell them how much money you need for what you need it for. And then if they like it, they will probably follow up with the question of, okay, let's exchange NDAs, non-disclosure agreements, so that me as a company can provide data about my business to the investor so that they can get acquainted with the business in more detail. So the first is exchange of NDAs, which in itself sometimes is a pain in the ass. Whose NDA are we going to send out? If they show interest, if the investor shows interest, you send them the NDA. Second most important step is to be prepared. You're going to ask for your data about the company, right? The presentation materials, overview of the market, financials if you have any, analysis of your products, whatever, description of your technology, high level. Shoot me over some information about the company, and you send the link to this virtual data room, like a shared drive. And so when the due diligence starts going, sometimes the investor gives you what's called the data request. If that is successful, normally the investor should give you a term sheet with the proposed terms of a potential deal right after.
Is it typically always worse than you proposed?
Yes.
Right?
Yeah.
And then you start
I
negotiating.
don't remember a time where
you're probably always ending up a little bit more than you expected, right?
Yeah.